Hey guys. All content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Something changed in the markets after this week, something fundamental that speaks of worse things to come. Every single time we have experienced a significant drop in the market, whether it be from a big blue chip stock missing earnings to a global event like Ukraine's war unleashing or Jerome Powell opening his mouth, the market has dipped. But right after that, we have always enjoyed a nice little bull run. People were always left scratching their heads because they wondered why it is that markets are going up when news were bad. It was as if the market was more reactive to sensationalism than paired with fundamental value, which is true to a large extent. As we have noted on many multiple videos, each bull run was of lesser strength than the previous one, which I asserted as being perma-bull psychology shifting. Every time we dip, people's inherent expectation of a bull run is affected. For years we have enjoyed a bull market rally after another, regardless of how bad the economy was. This conditioned investors to think that for every dip, a bigger bounce and higher high would be achieved. Of course, this worked wonderfully since 2020, but 2022 is slapping everyone in the face with a nice old reality check. And as permanent bull expectations deteriorate over worsening market corrections along with worsening economic conditions, uncertainty and fear will rise, and you will see less bids on the ask after huge dips. And this week was the result of that, a market that has been beaten down so many times that it shakes and fails to fully rise back up. It's full of fear, and this is significant because it could mean that the worst is about to be unleashed relatively soon. The less people hitting that buy button, the more people are going to sell and prices fall. Now, for us meme investors, in particular GameStop ones, that's a great opportunity. GameStop investors' sole goal is to lock the float in Computershare, and with a constant number of people indulging in consistent purchases regardless of the price, significant dips such as these will be easily bought out, further speeding up the process of locking out the float. It's why I am actually more excited as the price goes down. But that aside, we need to talk about some recent changes, in particular coming from the SEC itself because they stand to affect us retail traders in the untied states. First off, in 2020, the SEC received more than 300 direct reports of possible fraud or securities violations. The agency, for some reason unknown to us, decided to tell nearly all the callers to file their tips on their own and did not fill out the forms they are internally required to do. I mean, imagine calling the police because you want to inform them of a serious crime taking place and they tell you have to go and figure out how to file a police report on your own because the police just doesn't feel like filing out the report themselves. But as if this wasn't enough, the SEC may not ban payment for order flow as previously anticipated. After the practice came under regulatory scrutiny 9NY in 2021, Bloomberg is now reporting that the SEC will stop short of banning payment for order flow following months of internal debate at the agency. This would be a monumental win for criminal brokerages like Robinhood and a galactic win for market makers like Citadel. What this means is that they can continue to route trade orders in between each other instead of directly to the stock exchanges, creating incredibly unfair trading conditions for all retail traders. Bloomberg noted that the SEC may enact other changes to make the practice less profitable, but a final decision has not yet been made as the SEC is reported to be planning to make a hug restructure on markets. Regardless, this is a huge loss for us retail traders who have been trying to get better market conditions. Transparency is dead in our markets, and the SEC has once again proven to me that they are no longer looking for the best interest of the individual investor, they are looking out for their friends and pals at Wall Street. Funny enough, someone posted a screenshot of a 2008 form release by the SEC where they express how they have zero tolerance for abusive naked short selling. The jokes just write themselves on the walls these days. Alright, enough of the SEC for now, moving on. New measures of the economy now show that America's debt is set to post the biggest drop in 2 decades. This is actually good news. The government debt is decreasing at a rapid pace, but not in the way you might think. The debt is shrinking when measured against the inflated size of the economy. It is still growing day to day in terms of dollars, but that's not the important metric to go off, it's when contrasted with size of the economy. This can give the government a big break as well as taxpayers, and sucks big time for bondholders. The European Stoxx 600 index finally joined its American counterparts and regional peers in entering a bear market as the fears of greater recession pains increase. The index sank 2.3%, which is the lowest level since 2020. That's been driven by the latest data showing that the private sector in the Eurozone contracted for a third month as record inflation eroded demand and forced firms to limit production. As some investment directors are saying, we are indeed facing one of the most aggressive and globally pervasive monetary tightening of a generation. It's really sad to see that no much after 2008 we are back in square one, but here we are. Previous metals fell today, with gold hitting a 2-year low. Futures also hit a low, not seen since March 2020. The Dow is finally in bear market territory, dipping more than 20% below its January intraday record. Housing market is collapsing, seeing the prices for homes have the biggest drop in 9 years thanks to higher mortgage rates. Home prices in August were down 6% from their peaks in June. The housing market is definitely reacting to the monetary policy changes happening. No, this is not yet a crash, and the situation regarding the housing market is continents apart from that which we saw in 2008. Right now, the big issue is that we are in the midst of a housing shortage because Wall Street ensures, through political donations, that not a lot of homes are built as a way to artificially inflate the prices of the homes they bought to make renters out of all of us for life and all generations to come. Houses are getting snapped up left and right, and companies like Blackstone and BlackRock are both investing billions of dollars, even in these market conditions, to ensure that these housing discounts are taken advantage of. So what will happen next for housing? I have devoted tons of videos on this and I have more planned, but for now, to cover the basics, you can expect home prices to continue dropping. Depending on how bad this recession hits, we could see the national housing price decline as much as 15% in the best of cases and declining more than 30% in the worst case scenario. And this is without scaling prices to be worst if international relations between China also don't worsen quick. There is no good end and we are in the thick and middle of the storm, so adjust expectations for everything you do. Lastly, I want to talk about GameStop and AMC as I have a dedicated message to you investors. It's important now more than ever to remember the price is not tied to the real value of these shares. In Discord, on Twitter and even YouTube comments, you will see many good investors say they just don't see the light at the end of the tunnel anymore. Hedge funds will continue dipping and their money will continue losing value. That has been the prognosis of this play, and this goal is furthered by market conditions which make it optimally easy to achieve such goal. But it is in times like this you must remember why you are even in this play. Forgetting aside all the moral bravado, we are in this play for a simple reason: to force hedge funds into covering. Prices fall, we lock the float even more so. Many retail investors will sell, but not enough for them to cover. We are rapidly locking the float of GameStop, and when we do, they're the ones who are going to have to answer to us why it is that GameStop is still being traded and with what shares, since we own all of them. This play requires two things from you to see it through: the knowledge and awareness of what's happening with meme stocks, and then the ability to remain zen. The price is made up, so don't lose your train of through and center to daily candlesticks. And yeah guys, I don't know what else to tell you regarding markets other than we have been right on the dot since last year. I want to close out the video with a heartful message of appreciation for all of you guys. You know, when I began talking about markets and giving a very negative prognosis, I was laughed at, I was blasted as clickbait trying to get hype off of fear, and thousands of people actually left in droves when I began posting that content. I guess it was unacceptable to many to be anything but optimistic, but as months of painful pullbacks have passed, our market assessments have been proven right. I talked about China falling apart with Evergrande being just the beginning back in November last year. I talked about a huge market recession coming as early as September last year, and I said MOAS would not happen for years. These are truths that are hard to accept, and though many did not like it and left, you stayed, and if you are watching this video right now, I just want to thank you so much for listening to me. Even if you didn't believe me or disagreed, I am beyond humbled by the respect you have given me. I will continue to seek the truth in everything I do and share it with you guys, as painful as it may be. Though today marks an incredibly heartbreaking day for all investors in the market, it also marks a point where the weak fall off and the strong remain. Remember that the night is darkest just before the sunrise. Continue to invest in what you believe in. Don't listen to other YouTubers telling you to sell out of fear like they did. Stay strong and seek to understand that desperation is not suitable for long-term gains. The market is bad and it will continue to be so. I estimate based on current analysis that we could reach near the lows we saw in 2018, so that's a pretty big dip even from here. Stay strong. Stay laser focused on your individual financial goals, prepare for the worst, and remember that this is just a low point in life for pretty much everyone in the globe, not just you. I will always be here pumping videos out for you guys, so never fear me gone. If you need to talk or chat or discuss things to get them off your chest, know that you can reach me in Discord. I love you all to the moon a million times and back. I hope to see you all next week. I will probably be making a video on Sunday. Until then, have fun on your weekend. See you next week and to the moon.